Let's have a look at your market news now. China and Hong Kong stocks began the week higher this morning, buoyed by data showing expansion in factory activity in the world's second largest economy in November. China's factory activity expanded at the quickest pace in almost 3 years in November, with solid increases in output and new orders. Eyes were also on the latest development of that ongoing Sino-US trade talks. Beijing's top priority in any phase one trade deal with the United States is the removal of existing tariffs on Chinese goods amid uncertainty on whether the two sides can weather a 17-month trade war that has endured. The Shanghai Composite Index added 0.1% to close at 2,875 points. Hong Kong's Hang Seng moved 0.25% better off to close at 26,418 points. The Nikkei in Japan closed 1% higher at 23,529 points. US stocks slipped on Friday in a post-holiday shortened session as a US-China discord over Hong Kong reignited those trade tensions, and retail stocks dipped on signs of a tepid start to in-store Black Friday sales. China on Thursday threatened to retaliate against a US law backing pro-democracy protesters in Hong Kong. The measures could include barring drafters of legislation from mainland China, Hong Kong and Macau. The Dow Jones Industrial Average fell 0.4% to 28,051 points. The S&P 500 lost 0.40% to close at 3,140 points. And the Nasdaq Composite dropped almost 0.5% to close at 8,665 points. Let's get more on the markets now. We go to the Johannesburg Stock Exchange. My colleague Arabide is standing by. Very good afternoon to you, Arabide. Lots of red behind you on the board. What's moving the markets this afternoon?
Yeah, good afternoon, Nzinga. Look, the market has certainly decided to head off in negative territory this afternoon, so a bit of red movement for today's trading. So not necessarily the greatest, but it is a flat stance, though, for the local currency ahead of tomorrow's GDP numbers. Of course, those aren't expected to be too bright. Of course, we had plus minus 3.1% fall in GDP in the first quarter, and then a 3.1% uptick in the second quarter. So effectively, we have not grown. We've stood still since the end of last year. How much, though, have we grown in that third quarter? Or perhaps it's turned negative. Well, a Reuters poll suggests that it's 0.8% that we might get. I say a little too optimistic on my point of view. But anyway, we do have the PMI data as well having come out. 47.7 points, then falling from around 48.1 as well. So negativity in that sector as well. Manufacturing in South Africa not doing as well, would have liked either. So my colleague Nzinga will, of course, unpack that data just a little bit later on. For now, however, let's unpack the numbers and see exactly where things have gone thus far when it comes to trading across the rest of Europe and locally. Well, as you can tell, market pretty much green on some sides, but some negativity as well seeping in other areas as well. Let's chat to Bright Khumalo now from Vestact Asset Management as we unpack that market picture just a little bit more. Bright, thank you so much for the time. So a negative start to another Monday, but we are officially in December.
December, boss.
Is there perhaps a happy mood? Are we getting to that Santa rally at some point?
Well, you can't say Santa rally and opening, what's that, a couple of points negative, so it's not a good sign.
0.4%.
Yeah. Exactly, and I believe in signs and luck, and all these things, superstitions, only the good ones, of course.
Yeah.
Looking at the markets, like you're saying, it's been an interesting year. We went all the way to 11%, probably 12% at some point. We've lost all of those gains. You can say this year we're up about 6% if you include dividends. So Total return index is showing that it's not looking good for South Africa so far. While if you look at global markets, on the other hand, we talk about the S&P 500 up about 27% year to date.
Record highs continuously there.
Yes, record highs. We saw last week new record highs as well. I mean, that boat is picking everything up. It's almost unbelievable.
How do we convince people then to have to stay in equities, for example? I mean, you have the tough job of telling people, no, it's okay, stay, hold on,
diversify as well. That's what we tell our clients, right? You have your local portfolio, you have your offshore portfolio. You look at them in tandem. They're together. Yeah. And obviously, if one does exceptionally well, that helps as well. Your whole portfolio goes up. And locally, we still think there's a lot of opportunity here, but we still have those fundamental problems, which is the big one is Eskom, and the big question mark that's hanging over us as a country about the state-owned enterprises that no one wants to do anything about. I mean, we've seen the communication at SAA, for example, has been dire. It's been horrible, man. Yeah. How are we giving out increases of about 8%? We wish we had an 8% increase. And then and on top of that, you're talking about not having enough cash flow to last the next month. And you're asking for handouts from the government even more, so it doesn't make any sense. I mean, that's just one example. There's a lot of those. I mean, Transnet is another problem. We've got a whole host of problems that we could which some people say are quick fixes, but the big problem is still Eskom.
Look, we hope to find some sort of solution, and hopefully somebody actually rolls up their sleeves and actually gets things done.
Yes.
Hopefully that man, for now anyway, at Eskom becomes Andre de Ruyter, but
good luck for him. Good luck to him.
It's going to be a tough one for him.
Yeah.
If we get into some equity news then, in terms of diversification, it has been a difficult time for property stocks. So they've had to find something
the sweet
somewhere,
spot,
right?
Yes.
Vukile being one of those.
Yeah, Vukile is an interesting one. Actually, they're at the auditorium downstairs as we speak, the results presentation. Their total assets have grown from 35 billion to 37.1 billion. It's impressive in the current market. Looking at the actual performance for the half year, they did exceptionally well, considering that they're mostly regional malls, and they're doubling down on regional malls, saying that they think that's where the growth is going to come from. I think the thesis makes sense. It's saying we're going to go to the mall, your day-to-day malls, the mall that's more a necessity than super regional malls where you go for the experience, right? So that's where you do your groceries, your day-to-day stuff that you need, close by to your home, as compared to, like I said, super regional malls. And I like that deal that they did with Mbago, which is that all-female consortium led by Usindi Mabasokoyana. So Usisi Gimi Antugu. Yes, 700 million rands, a big deal. They offloaded 10 assets, which some of them very interesting. Those industrial assets in Midrand, all of them. It's like hectares and hectares of land, productive land with distribution centers, etc., etc. It's very interesting. Lots of good tenants and very high tenant retention there. And for the group as a whole, 82% also still looking good, considering the fact that you go around asking at these results presentation, like Dipula, for example, they're complaining about how Standard Bank and apps are closing down branches, etc., etc. And the only solace in the banking sector, where they're getting more tenants is only Capitec, which is getting branches. So, you have these tenants, and all of a sudden you no longer have a tenant because they no longer need those services. It's where it's headed in those big malls, and it could be a problem for the guys in property. So, but there are opportunities depending on where you look.
And I suppose that's why capital and counties are on such a mission to try and get the right kind of portfolio, try to buy as much as possible as well.
Yeah, remember they sold Earls Court for about 8 billion rands, or the equivalent in pounds, and then they're sitting about 900 million pounds on their balance sheet, saying, okay, this is what we have for acquisitions. That's about 17 billion rands. They already bought 2 properties which are not far from the current Covent Garden properties, and it's going to be very interesting going forward, because there's that whole Brexit thing that's going on there. It's dragging property prices down, meaning there's a lot of opportunity in that sector. But it's only a good opportunity if you have the money during the cyclical downturn that we're seeing in the property sector. And those with the money are the ones that have the opportunity to consolidate. Yeah.
Looking at those property stocks today, down 3.3% essentially, redefined properties as well. So kind of telling you exactly how difficult things are in that market.
It's not going to be easy.
Yeah, right. Yeah. Thank you so much, bud. Really appreciate it.
Thank you.
As you can tell there, the market down around 1/3% or so. The rand pretty much stable around 14.70 odd against that US dollar. So some sustainability there. Of course, the oil price all kind of vacillated. It was up around 1% or so earlier today. And a lot of that was based on a few jitters out of OPEC, then perhaps looking to restrict a little bit more when it comes to supply. They are headed for a meeting as well that will determine what happens in 2020. But for now, that is a look at the market picture and how things have fared. Hopefully the JSE can pick itself up. But for now, that's where the buck stops. My colleague Nzinga joining you right after this. Do stay tuned. This is On Point.